This is Bob Anderson, and I'm going to do a account update for September 15th, 2022 on my Apex live funded trading account. I took one trade. I think it was around 9:50 this morning. I actually took it with two contracts. I entered in the bottom half of the on the yellow line on the 1 minute chart, and then I entered on the break, and I got $637.50. I was done. I think it was 9:50 that I got knocked out. Boy, that trade took off too. Whew. I could have made double that. But anyways, doesn't matter. Patience. I waited through the morning. There were some trades that set up this morning, but as I've said before, I struggle with shorts. God, I struggle with shorts. I mean, if I could just figure out how to trade short, probably this would be a lot easier. Especially in today's market, given the fact that the market keeps going down. But anyways, so one of the things I wanted to really talk about today, because I keep getting messages from people, I don't understand this, I don't understand that, da. And one of the things I'm noticing from reading these comments is it seems like everybody's so used to the old school way of, oh, well, I bought this software package, and when I hit this area, I buy or I sell or whatever. That's not what this is about. These moving averages and all this stuff, they're really not relevant. What's relevant, again, is price action. These are just things to kind of help you recognize things in price action. These are just things to help you execute better in that price action. These are not to make the trade for you. Okay? I mean, so let me explain. There's an order by which you need to look at things. By the way, here's the settings again for everybody on my chart. SMA period 14 green, SMA 21 period red, EMA 9 period, EMA 9 period yellow. Swing, I have it set to 5. I mean, I could probably adjust that some. You'll see why. Sometimes it doesn't really show you the pivot. And then current day, open, high, and low. Open, very important. Bar timer. So anyways, one of the things I think some people may be missing is that there's really a sequence by which you need to look at a valid trade. I'll give you an example. I told somebody, or I said in one of my videos, that normally there's about 3 or 4 trades a day that set up on my 1 minute chart, and that's it. And this person messaged me, I'm seeing like 15, 20. Well, that's because you're not looking at this, because there isn't that many. Not if you're looking at it between, say, 8:30 and 10:30, and really 9:45 to 10:30, 11, maybe, depending on how much the market's moving along. You may go out to 11, but really 9:45 on is when I make my meat and potatoes. 9:45 to 10:30 is when I make my meat and potatoes on that 1 minute trade, normally. But anyways, just like today, I made it at 9:50. So anyways, there's an order of importance. Price action is the most important thing. That's what I'm doing, is price action. This is all price action. All these other things are here just to kind of help you. Trade direction, 5 minute chart. Are you trading in the right direction of the big money? Or are you trading on your 1 minute chart against the big money? You don't want to be trading against the big money, folks. You want to be trading with the big money. Give you a perfect example. Everybody's seen it on Shark Week on TV. You got the shark swimming, the big great white shark, and he's got these little fish that follow underneath him, and some of them that follow up by his dorsal fin and things like that. They're there to go in his direction because he's safety for them. Well, that's exactly what you're doing on these charts. You're looking to take these trades with the big shark. You're looking for the safety. You want to ride the ride with the big shark. so that you make the money. That's why I entered the trade today, and I was out in less than a minute for over 5 points. Combined, I had 12 points, I think, combined. So that's what you need to figure out. This EMA, along with the price action, shows you where there's a compression of energy, where the shark is going to start moving. While the shark's kind of hanging out, you don't want to be trading while the shark's kind of hanging out when he's got no real direction. You want to be ready to go when that shark is ready to strike. And that's exactly what you're doing. The EMAs kind of show you when there's going to be some movement. But is it the movement in the direction that you need? Well, price action is the one that determines that. Trade direction is the one that determines that. I saw some guy put a video out. Jesus, I saw a guy put a video out a couple days ago, trading futures, and he proclaims himself some kind of trade expert or something. Of course, he's never shows any profits or anything, but you know, that's the way most of them are. I show you my profits. There they are. But he was actually taking a counter trend trade right there. And he was showing you the entry and all that kind of stuff. And I'm like, are you insane? Are you insane? Why would you want to fight the shark? I don't want to fight the shark. I want to go with the shark. The shark is my friend. He's the one that's protecting me. Why do I want to go the opposite direction of the shark? Anyway, so I watched this guy enter this trade. This is the one he puts on his video. I watched him enter in the trade. The trade goes negative more than his profit target. I'm like, then it rolled over and it actually did hit his profit target. But why would you go for a profit of, say, $200 when you got a stop of $600? Are you insane as a counter trend trade? Anyways, I'm trying to help you guys avoid going against the current of the shark. Know your trade direction. Know your overnight open. Again, there's a lot of sharks on that. I'm going to show you that today. That saved me from a loss trade. Okay? And then moving averages is the fourth thing in order. So don't just be looking at you, oh, I touched the gold line, I got to take a trade. No, you don't. No, you don't. Did you do the other things first? Are you in the right direction? Did you have a breach of a pivot in the direction of the trade you're taking? If you didn't breach the pivot in the trade, in the direction of the trade you're looking to take, then that pivot that's sitting there is going to be your resistance the next time you go into it because you haven't breached it yet. So anyways, I'm going to show you some examples, and I'm gonna hope that I get some clarity. It's not just this. This just shows you where the energy is stored. But it doesn't necessarily mean it's the energy in the direction you're looking to go. You want to go where the sharks are going. I want to go where the sharks are going. So let me just show you some trades this morning on my 1 minute chart. And then I'm going to show you a couple trades for the 5 minute chart, gold line trade. And then I'm going to show you a failed trade on the gold line trade that you should have recognized would be a failure, and 2 reasons why. And that's very important, actually. So here we go. Damn, freaking. There. So here we are. We got our 1 minute. Jesus. Sometimes this thing locks up if I don't do anything with it for a while. All right, so here's your 1 minute chart. Okay. And we're going to get to the morning. So here you had a crossover down to this pivot right here. Here's your pivot that pushed it up. Right up in here. So you broke that pivot area to your right, down. And you're underneath your red line and it agrees with your 5 minute chart. Boom, you went up into your gold. You're doing I'm going to put this, Jesus, let me put this on sim. You're going to take your, like I said, you're going to do your sell limit and you're gonna drag it as this candle's being made right there. You're gonna drag it right there. It's your push up into your goal line. Bam. Let's see here, 58. That kind of went down, rotated up, 53. Boom, there's your 5 points. Now it thrusted your 3 points pretty quick. And then it rolled up, then it did your 5 points. Here's your pivot, your rotation, your break, your fail, your pivot, step down. This was a run up, run back down, boom, gone. Then we're going to go for attempt number 2. So now you're sitting here with your sell stop, just like that. You run down, you run back up. Here's your, notice none of these candles broke. That one didn't break, that one didn't break, that one didn't break. They didn't break down. So here you're at, boom, bam, there's 5 more points. Both those happened between 9 and 9:30 this morning. Just perfect trades. I'll be honest with you, I didn't take either one of them because, again, I struggle with the shorts. Okay? I'm just being blatantly honest about my own weaknesses in trading, okay? I just struggle. They were there, clear as freaking day, and I didn't take either one of them. Now, what I'm going to show you is, this is the trade I did take. I went long off the gold line, and I took the break, and then boom, I was out here at 950, 650 bucks. But look at this, and by the way, here was the breach. See, it broke these dots here. This was the breach before the pullback. That was the breach. It breached the top. It breached the pivots. Of course, it breached this pivot already, right here, that push down. It already breached that pivot. Then it broke the bigger time pivot here. Rolled back in, boom, gone. Now, here we go. This obviously broke a lot of pivots to the left, came down, boom. Here's a trade I didn't take. By the way, it worked. Well, I didn't take it because here's my overnight open. Again, swimming with the sharks. Are you swimming with the sharks or are you going to fight the sharks? Let me tell you something about the sharks. They're trading in the direction of that 5-minute chart, and they're trading on sides of the market. Are they trading for shorts or are they trading for longs? And they, in terms of overall market direction, this thing broke up through the overnight open. But at the same time that happened, over here, let me go over here. This is very important that you see this. The same time this blew up through here, your moving averages on your 5-minute chart are way down. Like right here, they are 12 points down. The gold line is 12 points below that. That means all the energy is still down here. Look what happened. Wham, got rejected. Even though it thrusted up through, even though that trade thrusted up through, it got rejected. And it got rejected back down for the whole day. And that was all intentional. Okay? So, you got to know where that overnight open is because you don't ever want to trade against it. If your moving averages are still below it, you don't want to trade long against it. If your moving averages are still above it, you don't want to trade short against it. Okay, now let's talk about shorts. Let's talk about the 5-minute chart. I'm going to go over here to my 5-minute chart. Here's my 5-minute chart. And one thing you got to remember that I've tried to explain, you can't just, on this gold line trade on the 5-minute chart, you really can't just go back and look at the past and say, ooh, that one would have worked. Ooh, that one took too much heat. Ooh, that one this and this, because the reality of it is this gold line is moving. So to give you an example, when this candle, see this push down, this was a crossover, okay? Created space between the candles and both these lines. Created space. Then it came over here and pushed up, okay? Well, when it pushed up, the actual, I've got it written right here. I did this on purpose, 39.57 1/4, which is right there where my crosshairs are, which is dead in the center of that little circle. That's where the entry would have been, because that's where the gold line was. It pushed through to 57.75. So it pushed through by 2 ticks, rotated back, bam, down 10 points. 10 points. 10 points. Just like that. 10 points, just like that. Another 5-minute, 10-point trade. But when you come back and look at it later, you're going to think, well, hell, this gold line was at 56 and it ran all the way to 57.75. That's almost 2 points. No, it didn't. No, it didn't. It just gravitated down that way because price moved that way after the entrance. See, this gold line keeps moving as time goes on. Same thing here. So here would be your second attempt. Remember, I've always said the first attempt is always your most important. It's your most likely to succeed. Your second attempt is less likely to succeed. Your third attempt is even less likely to succeed than that. Your fourth attempt, da-da-da-da-da. Here's your second attempt. It rolled down again, created space. There's no unusual movement. And 5-minute candles hide a lot of noise. So what happened is this came here, then it went right here, and it came right up to 51.25, which, by the way, this is where the gold line was, right where my crosshairs are. That was where the gold line was when this trade happened. Again, it ran back up to 51.75. So you're in at 51.25. It went through by 2 ticks. Bam. 10 more points in the same freaking candle. 10 points in the same freaking candle. 10 points. That's 2 trades this morning that went 10 ticks in the same candle off the gold line on the same side of the market. Now, let's talk about the crossover. Then we rotate up. I mean, it went here and rejected and crossed over. Now, you would have been out because you got your 10 points right here. 41.25. It rotated back up, blew up through the overnight open, as I talked about already, like we just saw. Now, let's talk about it. What are the 2 things? Let's talk about the importance of order. Price action, trade direction, overnight open. Are we in the right direction to take along in terms of trade direction? The answer is yes, because we're north of the red line. Okay. Are we in agreement with the overnight open? Not if we're taking a trade somewhere around here, because we don't have 10 points. This is a 10-point trade. And you really don't want to trade against it anyways, because money's going to try to push it away, because these are where the moving averages are versus the open. But what about, does price action agree? This is even more important. How many people are picking up on this? This thing pivoted up, came down, pivoted up again, but to a lower high. You heard that phrase before? Higher high, lower high, and then rolled over. I knew this trade wasn't going to work. Forget the overnight open. Forget that. When this thing rolled down and then pivoted back up north of these candles that were coming back to this gold line, when this pivoted up and attempted to run long without ever even touching this gold line and then rolled over, this trade's not going to happen. This trade's not going to work, because now your steps are going down. That's price action. So you don't just stare at the gold line. You don't just look for the space. You got to remember there's price action and there's an order of importance of things. This trade right here, this long off the gold line, never had a chance. But by golly, the next one did. Bam, 10 more points. See the space, crossover, pull back, right to the gold line, bam, down. Okay? I may have gotten a little heated there. I don't know. I know price action is the most important thing for you to know. And the reality of it is, me putting these moving averages on there and stuff like that, that gives people this false sense that they don't have to see what's really going on. They just have to look at the lines. No. The lines show where the consolidation of energy is. That's it. You need to know what direction the energy is looking to go based on the price action that got price to those lines. I hope that helps a little. Again, I put those numbers up on there so people can see what I'm trading off of. And again, hey, $637.50, one trade today. I'm excited. Man, I feel better. That's better. That's better than two trades that I had nothing to do with all of a sudden putting me $400 in a hole and me trying to figure out how the hell to get out of it. Anyways, that puts me almost at $1,500 for the week so far. Hell, I got one more day left. That's a pretty good week. That puts me on pace, again, for the $3,000 level that you would be looking for on a $50,000 account at Apex to pass in 10 days. $1,500 one week, $1,500 another week. You know, now you don't have to pass in 10 days, but you got to trade at least 10 days. So anyways, it puts me on pace for that. So I'm back in my saddle again. And I'm sorry if I got a little hot today, but I want you to succeed too if this style of trading works for you. Okay? Talk to you later. Bye.